Morning. Welcome to the Fractal Effects live stream. Please make sure you read the disclosure. If you're following along with us, make sure you do in a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. Now let's jump onto the charts. So today was, we had news drop, big news drop. Today we had Fed Chair Powell speaking at 9:20 Eastern Standard. So usually anytime Powell speaks, we avoid the morning on any U.S. assets. Usually oil's safe when connected to it. So we're going to take a look at oil here on the left, and we also have Brent crude oil. And we can always look at these two pairs to see if there's any divergence. We're getting close to a confirmation. We had a downside expansion. And we're sitting right inside London's fair value gap. Let's see if this confirmation sticks. We got about 3 minutes left on this candle. No real signs of divergence yet. Actually right here, sorry. So right before London, Asia set a low, a lower low. Let's see if it actually swept any liquidity. I guess it'd be too far to the left. So US crude oil, we swept that liquidity. We swept all the lows, whereas Brent crude did not, showing us divergence to this market. Needed more liquidity to eventually push up. Got 1 minute left. Let's see if we get this confirmation. We had a small range all the way up until 10:25. Let's see if we sweep this high. And then we get a retracement after that. Okay, so we have our confirmation. We did not take out the highs. On the 4-hour time frame. We are bearish. Check the daily really quickly. Looks like that's where we're probably headed on the daily. So since we have a downside expansion model, it's funny, with all previous sessions, we got a bullish signal, a retracement, an extension, then a drop. Bullish signal in London, retracement, full extension to 1 standard deviation, then it dropped. So let's see how far we retrace. And if there's enough room to get to 1 standard deviation, or at least to the 238, the orange EMA. See if we get an extension. To this fair value gap. And if there's any telltale signs that this wants to push up. Now again, since we've already swept the lows of London in US oil, this might want to push up. It might not want to go down any further than this point. We'll see if these now move in tandem, or if Brent crude oil will pull this market back down to take out London lows. Ideally, we want the divergence to stick. Slowly moving down now. We're back inside that London fair value gap. We don't have a crossover of the 20 and the 50 yet. So we are still bearish. So one of two things is going to happen. Either we're going to crash right through this 50 and head down, or we're going to gesticulate here long enough where the 20 crosses the 50. So until that 20, the red, goes above that aqua, we're not interested in a buy, even if it touches it. Even if it touches it, hits here, and signals or has a rejection, until we actually have a crossover, we're not going to be looking for a buy. Same thing here, see? We touched it, dropped. This could just be another liquidity grab, false move to push back down. We're also below the 238 with the downside expansion model. So this is how we use all this confluence. We use our models, session models. We watch where the 238 is, and we watch to see where the crossover here is. Now again, this could cross over and just keep pushing up, but until we see that crossover first. Any rejection here doesn't mean anything. This could just cut right through. Oil is moving fast though. Brent crude now back at that London fair value gap. Neither one has swept that high yet. Slowly making its way down to that fair value gap. So that's right in the 50, near the 61%. This could follow in suit, where the bullish confirmation sticks until we at least get to one standard deviation or the 238, but until we see that again crossover, let's say the crossover happens even up here though. Standard deviations up there. The crossover has not happened, so let's say the crossover happens up here. There might be room there, but we want to see all the confluence. We're back at London's fair value gap. This kind of projection means nothing to us. Again, even if it started going all the way back up, there was nothing here. We don't even have a cross. If anything else, this might just be bouncing off of London now to push back down all the way through, just so it can take out, or Brent crude could take out the lows, and then they can start moving in tandem again. Over every asset, you can find a diverging pair to show you these telltale signs. With oil, we're using Brent crude oil against US oil. Getting a wick there, some rejection. Or the other thing it could be doing is, we take a fib from this high and low. Didn't hit 100%. This wasn't an engulfing candle, but this had been an engulfing candle. Could just be turning back around to cut right through. That's why we're proceeding with caution until I see that crossover. I'm not interested. Or whatever asset you're looking at, make sure you're looking at it on all time frames. 1 minute, 5 minute, 15 minute. All three of those are key time frames for this strategy. The indicator adjusts itself to whichever time frame you're looking at. So if I go to 15 minute, it's going to show me all the fair value gaps on the 15 minute. Drop down to the 1 minute. Again, it's going to paint everything out for you. So the fair value gap that we've outlined is sitting right above the 1 minute New York gap. So on the 15, we're still bearish. On the 5, we're still bearish. So usually when we're looking for, or when we get a bullish signal, a green box, and we're looking for a buy, we want to make sure at least the 20 has crossed over the 50 first. And what we're usually looking for is a second touch after that crossover. But what oil has been doing, it's been using those slight crossovers to actually get that extension and then pull back, which isn't a real push. We don't want to be in a scenario where an extension just hits one standard deviation and drops. Just hits one standard deviation and drops. It's not what we're looking for. We're looking for a safe move, high probability move. And right now everything is bearish and we got a bullish signal. So this market might not give us what we're looking for today, but let's see. Just got to be patient. We are close to a crossover here. But again, I don't like being under the 238. Could do a crossover run up to the 238, but that's not, see, we're under one standard deviation. That won't give us the juice today. That won't give us 1 to 3. We've had a lot of news drop today, or this week, especially with Powell speaking today. And even tomorrow, we have Core PCE price index. It's earlier in the day, so that shouldn't pose too much of an issue. So even though we're at that fair value gap, we haven't hit the midpoint of it. We haven't tapped the 20. 20 still under the 50. And right now, it's bouncing off London's fair value gap. It might just be engineering new liquidity. About 5 minutes off 11. Nothing of interest here yet. This could just be another false move. Again, that's why we wait for that crossover to protect ourselves. Now, if we stay under one standard deviation, and we do get this crossover within our time frame, and we're sitting, let's say, in London's fair value gap, then we might look for a second retracement back to the 20. But right now, our rules dictate we just sit on our hands. And for beginners, make sure you're managing your position when you are in a trade. Or you're in a demo account, you should be able to practice moving that stop loss. As soon as you get to 2R, you want to make sure you roll your stops to break even. It's the number one place that most traders fail. 95% of traders fail because they don't put in a stop loss at all. They just keep watching the market drop, hoping that'll turn back around. It never does. Blow out their account. So make sure you're watching the risk management videos in the Learning Hub. Make sure you know how to put in a stop loss. And then managing your position, make sure you know how to move that stop loss to break even. Make sure you know how to take some off the table, close off some of your position on whichever platform you're using, be it TradingView, MetaTrader, or an internal system that your broker has. With the Fractal Effects system, there really is no breaking even. When we break even, we make sure we actually walk out with some profit. So in the market, if the market ever turns on us, we know that we actually bank some money. Right now, again, I'm not interested in this move. We have no crossover. Not to mention this was a shallow retracement. We didn't even get to 50%. So if this is a true shift in momentum, and now we are bullish, then it's moving at a pace that we can't catch it. I want to see this cross over and then a retracement back to the 20. Till then, we're not interested. And we're at 11 o'clock now. So we got 30 minutes. So we're close to a crossover. Let's see if it sticks. But as mentioned before, I don't like taking buys when we're under the 238. Our probabilities are low. In order for this to be a high probability trade, I don't even mind the downside expansion model. I would have wanted to see the 238 under us, the 20 and the 50 already crossed over here. And then I would have looked for that retracement back to the 20, this fair value gap to take out this high and hit one standard deviation. Right now, I'm not liking the story. Again, even London, we got a bullish confirmation, a deep retracement. Then it took us forever to get to one standard deviation. Two hours. 2 hours from confirmation to extension, because it was moving against the trend and then eventually crashed to take out these lows. Getting close to a crossover there. Remember, there is no wasted time in the markets. Time in the markets is better than timing the market. Pattern recognition, understanding market dynamics, being able to read the narrative, tell the story, that's what's important. That's the difference between actually getting a proper extension and, again, a nail biter that just barely touches one standard deviation or hits the 238. We're not looking to break even. We're not looking to just make something. It's a desperation move. We want to see a full extension. We want to see the strategy stick. Still don't like the fact that we're under the 238. And the fact that the 238 is under one standard deviation. But this could cross over, tap it, and push up. But the probabilities are low. Let's see. Slowly moving up. We're also working on another iteration of the indicator. where you will get a signal as well once these two cross over. So you know at all times where the 20 and the 50 are across multiple time frames actually. We'll have a ticker up here that'll show you 1 minute, 5 minute, 15 minute without you having to switch charts. It'll help you with the directional bias. For example, if you see all green, then you know that they're all heading in that direction, in a bullish trend with the 20 above the 50. So Brent crude has already crossed, and we're sitting right inside London's fair value gap. US oil yet to cross. Let's see if it does on this candle. So pushing down now. This candle might not give it to us. Remember, in the beginning, you're just looking for one successful trade. With 1 to 3 risk to reward. Once you're compounding, that will give you 12% a month. That's what you should be striving for. Don't look to just get into any trade, any trade every day. Only look for the high probability trades. And if you don't see them, you don't see them. Simple as that. 1 hour of your time to be making that 12%. That's not a lot to ask for. So we have had a cross. But again, we're under that 238, and that 238 is well below 1 now. Brent crude has had that crossover now. Market is pushing back to it. Let's see what kind of reaction we get. Now we're slowly getting that drive back down. Barely crossed over. About 15 minutes left. Driving even further down. Brent crude now back at the 20. Back at London fair value gap. Anytime we have a crossover happening at the same time as it comes back to touch it, it could just cut right through. Probabilities are too low right now. Just shoot up from here and that's fine, but it's a low probability trade being under the 238. We'll watch it for the next 13 minutes, but I'm not interested yet, if at all. Just don't like the narrative. Downside expansion model under the 238. Barely at a crossover. No retracement below 50%. Now it's testing the 20 right at a crossover. Not to mention the divergence with Brent crude, which has not taken its lows. And neither market has taken the highs. Getting a rejection now. The funny thing is this is actually above 50% probability. We're sitting at probably closer to 55, even close to 60, but anything lower than 70, we're not interested in. Remember, these setups happen every day. You don't have to jump into every one that you see. Just not liking the story. So let's watch this play out for the next 10 minutes, but I'm not interested in taking a buy here. And the more you get familiar with these, the actual expansion models that we have, the more you get familiar with the indicator and what to look for, you'll know how to see high probability setups, the ones where you don't have to wonder if it's going to go up or not. About 10 minutes left. Looks like we're making another push down. Even if this was a high probability setup, what you want to see is as soon as it hits your zone, you want to see displacement. You want to see the market start to move. The longer it stays in one particular point of interest for too long, you see too many gesticulating candles, the probabilities decrease, especially the further you get away from 1130. And remember, there's 3 sessions in a day. New York, London, the Asia session. So if you don't catch this, if you're not in the morning, you're not awake in the morning or you're busy in the morning, you can always check out Asia session. Slower volume, but you can find some good moves. Market still right at that 20 and 50 EMA crossover. That's too weak of a hold there. I mean, just like the military, there's different lines set up. And right here, what we're looking at is the last line of defense. I'm already breaking it. Eight minutes left. Looks like it wants to dig in deeper into this fair value gap. Another thing it could do is could break this fair value gap, retrace back into it, use the 20 to push back down. Brent crude has already broken that. Let's see which one pushes down first, or if we get any kind of rejection from here. Get some more rejection from here. We're getting some reaction here now. Four minutes left. Remember, always avoid FOMO. Seeing this candle doesn't interest me. Still doesn't fit the narrative of the story. Even if this goes all the way back up, doesn't matter. Too low of a probability. Did get across. This is where things get sticky the most, is actually at the cross. That's why we want to see the cross happen before or near range formation, and then we look for the retracement after the cross. Otherwise this could take a while to cross too, like for these two EMAs to start spreading apart. 2 minutes left. Let's see if it takes these highs. Just took those highs. Got into the 238. It's now finally taken this high. Brent crude also taking the highs. Now let's see if it wants to continue up from here, or now that it swept the highs, it just wants to drop so it can take out the lows here. We're at 11:30. We'll see where this candle goes. If again, if the 238 had been under us, this crossover had happened here, this would have been interesting, but just too low probability. Let's see if we come crashing back down or if we just shoot up from here. We are well past 11:30. Let's watch this candle play out, but make sure you check us out on fractaleffects.com, where we teach high probability algorithmic trading. Make sure you hit the subscribe button, turn on your notifications so you know when we're live. In about 2 minutes, we will conclude this session. And we'll be back on Monday. Let's see if we get any reaction off this fair value gap, or if it just cuts through and takes out these lows. For anybody who went in long, their stops are a little right under here. About 23 seconds left. Okay, we'll be concluding the session there. And again, we'll be live Monday, same time. Hope you have a great rest of the weekend. Make sure you do some back testing as well. For those who are part of Fractal Effects and you have access to the indicator, pick whatever pair it is that you trade or like to trade, and then find its diverging pair and take a look at how it did over this last week and compare. We'll see you guys next week. Take care.